Hi there, it's Grant here and welcome back to the Fast Track Options Trading Challenge, where it's my goal to help you to understand options, how to trade them so you can start options trading fast. And really my goal for you is by the end of the challenge you're gonna have a basic understanding what options trading is, the different types of trades you can make, so then you're going to be in a position to think about maybe getting into options trading and placing your first trade. So in video one, that was all about basically what options trading is. So if you haven't watched that video yet, I'll link to the video down below. But in video two, what we're going to look at is the types of options that you can trade. So with that said, hang on to your seats because we're getting right into the nitty gritty now. So what are the different types of options you can trade? So there's basically only two options contracts that you can have. So you've got something called a call option, which gives the options buyer the right but not the obligation to buy a stock at a specific price by a specific date. Then you've got a put option. Gives the options buyer the right but not the obligation to sell a stock at a specific price by a specific date. And basically we can look at the difference between call and put options with this grid. And must say, whilst there's only two options contracts, you can get a call and a put option. There's four different trades you can make with call and put options. You can buy a call, you can sell a put, or buy a put option, you can sell a call option, and you can sell a put option. So this is really, the key difference between all four. So if you buy a call option, it gives you the right to buy a stock in the options contract, but in order to have that right, you pay a premium. You can buy a put option on a stock, but that gives, for doing that, you have the right to sell the stock in the options contract, but in order to have that right, you pay a premium. You can also sell a call option, but if you do that, you have the obligation to sell the stock in the options contract if that option is exercised, but in order to take on that obligation, you collect a premium, which is the money you collect up front. But you can also sell a put, which obviously you have the obligation to buy the stock in the options contract if it's exercised, but in order to have that obligation to buy, you collect a premium up front. So let's look at how do you make money, with these, with the two options and the four different trades you can make with them. So if you're bullish on a stock and you think the price of a stock is going to go up by a certain date, you buy a call option. If you're bearish on a stock and you think the price of a stock is going to go down by a certain date, you would buy a put option. Just very quickly, the money you make buying a call option is, just say, for example, the price of a stock, the strike price in the call option contract is $100. If it shoots up to $150 and you exercise the option, your profit is going to be $50. It's going to be the difference between the stock price and the strike price. Inversely, if you buy a put, basically, if the strike price in the put options contract is $100, so if it drops to $50, you'd exercise the option and your profit is going to be the difference between the strike price in the options contract and the stock price, which is $50, so you make a $50 profit. Inversely, if you sell a call option and you're bearish and you think the market will go down, the money you make is going to be the premium you collect upfront from the option buyer. And it's exactly the same if you sell a put option. Basically, the money you make is going to be the premium you collect upfront from the put option buyer. So basically, these are the four trades you can make with call and put options. So let's just wrap this up. So here's the key takeaway. So when you buy a call option, you make money when the stock price is higher than the strike price in the options contract. This is your profit. When you buy a put option, you make money if the strike price is higher than the stock price. This is your profit. When you sell a call option, your profit is a premium you collected up front from the option buyer, assuming they don't exercise the option to buy at the strike price. And when you sell a put option, your profit is a premium you collected up front from the option buyer, assuming they don't exercise the option to sell at the strike price. So in a nutshell, wrapping all of this up, there's two types of options contracts. A call and a put, And there's basically 4 trades you can make. You can buy a call, you can buy a put, you can sell a call, and you can sell a put. And that is the basics of options trading right there. So well done for getting through this video and sticking with the challenge. We're really starting to get on with it now, and we're really getting into the challenge and starting to go deeper and deeper into options trading. So well done for watching this video, and I really do hope this is helping you to understand options. Watch this, feel free to watch this video as many times as you need, and if you need to recap the first video, I'll link to that down below. So in video 3, what I'm gonna do is I'm gonna look a little deeper at call options and give you some examples of basically what go deeper into what call options are, and some trade examples so you can see how call options work and how you actually make money with them. So if you like this video, why not consider liking it, and why not consider subscribing to the channel to get notified, obviously, when more videos in the challenge come out and other videos that we put out on the challenge, on the channel. So thank you very much for joining me. Last thing I'll say is I'm going to link to my favorite options trading financial advisories below. Basically, both of these advisories give you options trading alerts to buy or sell stocks with options contract, which is key when you're getting going, because you can have no idea what to buy or sell, and you can have no strategy. But with these financial advisories, they're going to give you, the strategy and the buy and sell alerts, so you know what you're buying and when to buy and when to sell. I'll link to them below. They're called One Ticker Trader and Jeff Clark Trader. They're only $19 each, really affordable, but they're going to be key to help you getting going with options trading. So check them out down below in the description. So thank you very much for joining me in this video, in this challenge. Hope you're enjoying it, and I'll look forward to seeing you in video 3.